Okay, if you don't do this and you're a trader, you will fail. So in this quick video, I want to share a technique, or I want to talk about a fundamental, a basic thing that every trader must know. And I know if you are already trading for a while, you would already know this. But this one technique, you have to know it, no matter what strategy you are trading, whether it's indicator based, price action based, whatever it is. As long as you're doing technical analysis, you need to learn this thing. Whatever time frame you trade, whether it's a daily chart, an hourly, monthly, whatever it is, the first thing you want to know when you trade, particularly if you are day trading, and any if you're swing trading, whatever you're doing, you want to know if the market is in a trend phase or is a trading range. So the point I'm on to come, um, the point is that you, as a trader, forex trader, crypto trader, stock trader, whatever trader you are, if you're doing technical analysis, you want to know within a second, the moment you look at a chart, you should be able to tell if there's a trend or if there is a trading range. So if you look at this chart, this is the DAX 40, the German index on the 1 minute chart. The reason I'm showing this is because there's a signal over here on our system, but um, I have filtered this signal, and I made a YouTube video about this. And then later on, I thought, let me just address this fundamental question, like this very very basic skill that everyone must know, whether it's a trend or it's a trading range. So let me explain a little bit. Charts are waves, they go up and down. One candle is bear, the other one is bull. And when you combine them, they form patterns. When the market, suppose this is the point zero, this is the day one, let's suppose this is the IPO date of a stock. It started here. The very next moment, when the first bid or whenever the first stocks are offered and the chart begins, let's suppose this is the beginning and it starts to go up. And it starts going up, we won't have this point until the next minute it starts to come down. Now, if it comes down here and stops and it starts to go back up and breaks that level, at this very moment, you are in an uptrend. Around here, it was going up. For this period, the trend was up. But then there was a correction in it. So here you cannot say the trend was down. You can say that within this period, for this moment, for this small period, if it's a 1 minute candle, the trend is down. But as a whole, this trend is still up because the prices, when it came down, it did not go below this low. So this is your swing low and that's your swing high. And as soon as price goes above it and closes there, now you have one high here and another high there. And you have two lows. Now, if you look at this low and this low is higher than the previous low. And this high is higher than this high. So you have a new high and you have a new low, which is higher low. So this is a high and a higher high and a low and a higher low. So this would be H, 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 L. And that's the sequence of, so if it continues to pull back, let's suppose it classically pulls back, retests this, and starts to go up again, you have sustained uptrend. And while I explain this, wouldn't this be a beautiful spot for you to go long? Because this is your support now, because prices stopped over here. And that means that while buyers, the bulls were winning, the sellers took charge. But as soon as prices came back to the previous highs, the bulls took charge and took the price up again. Most of the people will look at this and they would buy here. But most probably now it's a second pullback. So that's one pullback. This is another pullback. Maybe it pulls back again. But if it holds here, or even if it goes a little bit further down and starts to go back up, you have a resumption of trend. But now what happens? What if price comes over here or slightly goes up and comes down and then comes back to this level and does not break it and then starts to go up? So what's happened over here? Now you have two highs that are equal. So you have two equal highs, you have a third high going on, and here you have two equal lows. The moment you have two equal highs and two equal lows, this market is called a trading range. Now, the period of this might be small, but if you're looking at a 1 minute chart, let's suppose you're looking at an hourly chart. These are a few hours. Around this time, you had a series of higher highs with higher lows, so the trend was up. But around this point, you have a series of equal highs and equal lows. Now you have a trading range. So now, if this is an hourly chart or this is a 5 minute chart and you were to drop to the 1 minute chart, you might see some trends going on inside this wave and some little trends going up inside this. So if let's suppose this is an hourly chart and you drop to the 1 minute chart, you probably have 60 candles going down. So you might have some trends going down, but if in overall you look at it, you are performing or working inside a tall trading range. That will be the case. I'm asking you to use your imagination. Now let's go back to our 1 minute chart today. What do you see here? I see two things. One, this market is not smooth. I can see plenty of wicks going on between the candles, right? My moving average are not smooth. I'm seeing a series of highs, but look at this. There's a high, which is higher than that one, comes down, breaks the previous low, and let me explain this as well. What is considered as a pullback? A pullback is only considered as a pullback when at least one candle breaks the low of the previous candle in a bull trend. So this is a pullback, but then what's this? Let's zoom into that again. This is an attempt to create a new high. It does create a new high, but closes below, but does not break the low here. Instead, the next candle tries to break that high and the other one again, but it fails. So in real markets, prices don't always go to the exact level. But as soon as they are close to each other, we consider this as an equal high. So here I have equal highs. But then what it does, it breaks the previous low, but not the low of this. So we are now in a confused state. Is it a trend? Is it a trading range? It's kind of hybrid. It's taking a pause, comes down and breaks this low as well. Now, when it breaks this low and creates a new low, we can still assume that it's probably an uptrend because the swing low over here has still not been broken. And the moving averages are also kind of saying, oh, maybe it wants to go up. It tries to go up. Let me remove these lines. Let's bring another line. If that was our swing high over there, this broke it, then this broke it, and then that broke it. But in between, you have bear winning and then bullish and then a doji, kind of like a trading range candle. This is also a trading range. This is also a trading range. We have a new high, but the difference between previous high and the new high is not that much. So this is a very weak market. It's not strongly going up. And then you have new lows, and then it comes up and an equal high. Then it comes down, but doesn't break this and goes up. It doesn't have strength. So in a way, you can say it's an uptrend, but not a smooth one. The gyration is too much, so you will lose money on this. Then what happens? Over here, price strongly drops. So everyone's assuming, okay, we have a downtrend. Yes, you have a downtrend, but if you look at the overall picture, this is your swing high, and this is still your swing low. Price comes down to it, hits it over here. Now you have almost two. Now this hasn't hit it completely, but I would consider this as a hit because it's close to it. Nothing's exactly the same price. And then when you go too minute into it, look at this. We have two micro double bottoms here. And then again. Now let me just show you the complete chart, which happened after this video. Let's get rid of this. Click on yes. You would now notice that even after a little while, prices tried to break this but didn't succeed. And then it came back to it and touched it. What is this telling you? This market may be a tall or a wide, but a trading range and very choppy. How do we tell it's a choppy market? You have too many black and white candles, and every candle, when you look at it, you have plenty of wicks around the candles. And it's not creating a series of highs and lows. Now I'm just scrolled back a little bit to the earlier Tokyo session of today, the 18th February. If you look at the chart over here, what do you see? Let me bring my lines. So at this point, this was your swing high and this was your swing low. Let's delete this one. And I'll bring this one. What did it do here? It created a new high. Then it came down, but did not break this. So you're still in an uptrend with a higher low. And then you have a higher high and a higher low, but it did not break this. And then it goes up. So there's a technique of marking swing highs and lows when it breaks the previous high. I have a video on this on my YouTube channel that I uploaded last week or a few days ago. So it goes up. This is now your new kind of minor swing low, and it keeps going up until here. If I leave it here, it has found a trading range. So you have an uptrend over here, but that trend then turned into a trading range and it's going sideways. So in a market like this, you would expect the market to either break the market like so and then pull back or retest this and go down, or you'd expect the market, in most cases, what I will do is that I'll wait for this breakout. And that's my kind of bread and butter trade. I would want to trade here. I would want to trade here. Then when it turns into a trading range, I'll probably have a losing trade, but then I will not trade until new highs are created with momentum like this one. So this is your momentum breakout, and then it's a pullback. There's a pullback trade. There's another pullback trade, and it goes. So if you look at this chart, it's an uptrend. If you look at this chart in this region, it's a trading range, but preceding, before that, there's a trend. So I would expect it to break out. I would wait for it. So this is a trending market. This whole market is a trend where you have micro trends inside and micro swings in there, and then you have a trading range, and then the range is broken. Compare that market to this over here. Look at the wicks. Look at the messiness of it. We call it ugly markets. Over here, there's a lot of, a very strong bear move, but the market as a whole is not strong enough, and that was the point. So I wanted to make a 5-minute video, but it went to 12 minutes. The point I wanted to make is that when you look at a chart, especially for day trading, if you see that the chart is not smooth and it's not clearly trending, it's not creating new highs or new lows for bear trends, you want to stay away from that market, because that indicates that the strength of the market is not there. There is no imbalance in the market. So when there's an imbalance where bulls are very, very strong than the bears, you will have smooth markets like those. And then when there's an equilibrium found, there will be nothing happening. Bulls and bears are going up and down, and then the bulls win again. That's what you want. So if you compare these two charts here, the candles don't have big wicks. So the most fundamental and basic point for any trader, whether forex, stocks, crypto, anything, is to know at a single glance whether the market is in a trading range or whether it's trending.